The next stock on our list is Progyny, a health benefits company that specializes in fertility benefits. Their target market includes employers aiming to enhance employee wellness programs and individuals seeking support during fertility treatments. They offer a simplified approach for employers in terms of the administrative tasks while streamlining care for employees by connecting them with clinics and providers. Progyny's niche focus has led to a rapidly expanding market share, and it has become the top choice among Fortune 500 companies and other major players. In terms of their operational performance, revenue growth has been very strong. Meanwhile, the free cash flow yield has also been trending upward, currently sitting at 7.19%. Their return on invested capital has also been very impressive, currently sitting at 21.1%, indicating great operational efficiency. As far as the balance sheet goes, the company is virtually debt-free, with substantial cash reserves that have been growing each quarter. Current assets are 3.3 times the current liabilities, indicating great financial flexibility. This has allowed them to announce a share buyback program to repurchase up to 100 million of its common stock. During the first quarter of 2024, the company purchased about 723,000 shares for $26.4 million through the program. In terms of the management, the CEO has an approval rating of 79%, which is a positive. However, only 58% of those who reviewed the workplace would recommend it to a friend. Through the discounted cash flow model, our analyst found Progyny to be undervalued by roughly 40%, with an intrinsic fair value of $45.86 per share.